Hello traders, this is Rich Derrick from Tradesight with the market preview for Wednesday, February 27th, 2013. Today was kind of a measuring day where the market gapped higher, moved lower on the session, filled the gap, traded a bit lower, then ultimately wound up about 5 handles higher on both sides. So classic measuring day after a big down day yesterday. So don't want to take today's little bit of an update as too much other than just measuring off yesterday's short-term oversold condition. Let's take a look at the charts. All right, here's a look at the ES futures. You can see we had the big range expansion breakdown candle yesterday. Had this little measuring day that closed higher on the day, but really didn't reclaim much of the previous loss to the downside. What we want to definitely take note of is we're now down back below the zero-waist level here at 1500, and 1500 is going to be a very key area, and is also the area that the 10 EMA, which is our short-term defining moving average, resting in. So we're short-term negative, still above the 50 DMA down here, which is the red, but we do have a negative short-term condition in the market. Additionally, we have momentum rolling over, as you can see by the MACD that's been elevated here for quite some time, and we do now have this negative break. We don't yet have the zero line crossed, which would be right here. Once you cross to the lower half of the zero line after being above it for some time, that's where you really tend to develop the most momentum to the downside. So we had our measuring day today. I'll have to see if we roll down again tomorrow and continue lower. And then can get that zero line break to really get some momentum going, to really start working the short side more aggressively. All right, here's the NQ futures. NQ futures have a similar condition as the ES broad market futures, but we are now down below the 50 DMA, so we're below the 10 and below the 50, which is definitely negative, and we're hovering right around that zero line on the MACD, getting very close to that MACD cross to the downside. Also note that we're below the opening range of the year. We're technically still up on the year because this was last year's close, but this is the second lowest close of the year, and most of the accumulation that has occurred over this year leaves these buyers underwater. So we're definitely closer to seeing some downside momentum develop in the NQ side of the market. The PutCall ratio is somewhat elevated, but is not yet recorded a climactic reading. We did have this big spike up to 110, which is definitely notable, but we didn't get that terminally climactic spike up here around 1.25 or 1.3 to really signal a tradable bottom just yet. So right now we did see some institutions scrambling for protection, but didn't record that ultimate reading just yet. Cumulative advanced decline lines are still in a bit of a negative condition. The NQ definitely more so on the bottom here than the broad market New York Stock Exchange side. Got to see if we can level off here and start to reclaim and get back to a positive trend, but for now the trend is negative, and it's definitely something that's going to be weighing on the market here until this gets resolved. Here's a look at the 10-day trend. This is the S&P below it, just to see what the mirror looks like as far as a reaction to the market goes. We definitely are in the oversold threshold here. We're above 1.35, which is the area where you can get a snapback to the upside. We don't yet have a return back to a more positive trade, but we do have a sufficient amount of oversold energy loaded into the market, at least now, for a reversal. So this is definitely the one thing that the bulls can point to as being a positive for them. All right, now here's a look at the OSX in the red line versus the oil futures themselves, which is the blue line. The OSX did give us kind of a indication that the oil futures were going to pull back down lower as they were lagging the whole way up here instead of leading. Did get this sharp break to the downside because the OSX really just couldn't get up and support these higher prices. We had oil leading the OSX, which is always a problem. We right now have a little bit of a better bounce going in the OSX than crude in general, so that could be reversing that diverges. So definitely keep an eye on that for the possibility of having a little strength return to the crude market in the next couple of days here. Now looking at the SPX, the S&P 500 cash versus the TLT, we can see reversal here. We definitely had this this breakout above this key area here, where we had a risk-on posture accelerate to the upside. We've fallen back now to this area in the ratio chart, which is that prior breakout. This is kind of a key area of support for this cross and for that risk-on trade. This could be just a little bit of a retracement here, but if we start to lose this level, this would be another piece of evidence that people are taking off risk. More in an investment time frame rather than just a just kind of a trading technical reaction. So keep an eye on this. Remember, this is a weekly chart we have up here. So this is not a short term, just one-off reaction type of an event. So this is definitely something that has implications for the longer time frames here. Now looking at the individual sectors on the day, the HGX, the housing index, was the strongest on the day. It was up 3.25%, but it still only posted an inside day. We are below the 10 and the 50 period moving averages, and we also have this cross below the zero line here in the MACD after being elevated for some time. So keep a close eye on this little pattern resolving itself. If we do resolve ourselves to the downside here of this inside day pattern, we could have some pretty good punch to the downside. So be sure to have some shorts available in the sector if we do roll to the downside here. XAU was also one of the stronger sectors on the day. This was not so much an inside day. We actually did get outside of the previous day's range and start to push up above that. Still below all three major moving averages, so we're not yet short-term positive. But if we get a close and a follow-through above the 10 EMA, definitely be looking at the gold names and the other precious metals for long ideas. This could be definitely interesting, as it's very, very oversold and has been the fuel for the risk-on trade, being one of the sources of funds for that trade to happen. Let's look at the OSX. The OSX did make a new low by a decent amount on this day. Found support here at the 50 DMA, as you would expect, and also this prior static trend line. MACD is rolling to the downside. We do not have that zero line cross yet, where momentum really starts to develop. So be on guard for this 50 DMA being gamed to a certain degree here for maybe another day or two, if they can hold it here, and then we can see some setups. SOX index posted an inside day, up a little bit. One of the better performing NASDAQ sectors today, but still basically just an inside day with just a little bit of a brush below the previous low. BKX is in the area of gaming the 50 DMA also. Definitely a key area. These major moving averages tend to get gamed when they first get traded. There's usually some bids there, and the shorts are reluctant to press until they see some evidence that they've been truly broken. More so, this is more so true with the 200. The 200s really tend to be gamed and are more important levels. You can see we had that happen right back here in November of 2012. We broke down to that level, closed below it. They washed it back and forth. They took out the prior low here on this candle before ultimately using it as support and pivoting back to the upside. That's very, very typical of these major moving averages. They don't always turn out to pivot price back in the other directions. A lot of times they're continuation levels, but they do tend to get gamed. The 50 DMA is one that definitely is on the radar of all technical traders. So this definitely could be gamed. The gaming usually doesn't take as long, it's not as prominent as the 200, but definitely something to be aware of. BTK was fairly weak. It was only up about 0.5%, but it also wasn't as weak as some of the other sectors yesterday. Still kind of hovering around here in this same area. Hasn't really gotten too much momentum to the downside. MACD sloping down, but we don't have that zero line cross yet, and it's still fairly above the 50 DMA. Hasn't even been touched yet. So that gaming that can happen around the 50 DMA is still potentially in the cards here for the BTK. All right, the oil futures getting a little bit further into the count here on this buy setup. We're 7 candles down now. 8 or 9 is where you usually see a leveling off or an inflection, so definitely keep an eye on that. We are breaking down here with a cross below the 0 line here on the MACD. We're below the 10 and the 50. The 200 is not too far below. The 200 is actually right down here around this two-ways level, just around 90.5. So $90.5 is going to be a very key area for the crude futures if they trade there. And onto the gold futures. Gold futures were definitely stronger. We followed through to the upside as we had anticipated. We closed above the 10 EMA, which makes the trend short-term positive as long as we can trade one tick higher than this one candle. So definitely keep an eye on that going forward. Also notice that we've had this MACD's been very, very weak, but we're threatening to cross to the upside here. All right, folks, that's going to be it for this market preview. And as always, we look forward to seeing you again soon. This has been Rich Derrick for Tradesight, and thanks for listening.